We'll wait another minute or two.
Sir, I think this is not applicable to this appraisal thing.
Yeah,
When I go through a question, MCQ,
right.
they asking also what is the basic functions or what are the activities that will be doing with the development bank. So
Mhm.
could you please explain that whenever others comes also?
All right. So we will anyway. Actually, we'll try to do through some past paper MCQs also.
Okay.
They are like basically they may be very broadly. They have asked like overall functions, right?
Yes,
So
yes,
under
that's what
development.
I wanted to
Right, right.
let
So
you
if
know.
yeah, I will just brief, but better we do through a question like in the past paper questions that there are a couple of
Is
related
there
questions
any
on the MCQ.
specific functions that are up to the development bank or something?
There are like if you take when you say since the others are joined, so we'll explain
Yeah,
this.
we'll explain later
Yeah.
then.
No, no, we will start 8 o'clock. Right. So when come to the development financing, actually, like mainly we have a difference between development banking and the commercial banking, right? So the commercial banking is basically we can think about accepting customer deposits and giving back to the clients as loans. That's a main function in the commercial banking. When come to the development banking, they try to in the word itself they try to develop something. So in the sense develop what? So develop in the sense develop economy, develop say countries sort of say main KPIs like to support economic growth, economic development, regional development, agri, housing, industries, sort of those things that are coming under the development banking. But you can't say like generally these are the kind of key functions under that, but there are some key functions you can identify. Example, say infrastructure development, then it's one of the development banking. Like say if you are trying to finance say roads, harbor, like the bigger projects which could support in a country's infrastructure activity, that's one. And then you talk about industries like manufacturing support, like so you try to finance land, building, machinery, right? So those things which support the industries in a particular country, so that's industries also coming under that. When you talk about agri, yes, agri is another maybe supporting function towards the economy build up, so financing towards agriculture, so that's under the development. The most the peculiar thing is housing. Sorry, there was some issue in connection, right? So like so maybe agri, housing, infrastructure, industries maybe are coming under the development financing or development functions, except like what do you call working capital financing, maybe a bit of trade financing may not come in under the development financing. So that's broadly we need to understand based on the activities in a kind of in a banking jargon. So other than that, exactly you can't segregate like these are development, these are commercial. But generally we can understand the development financing function is something which is relevant to country's economic development, economic growth, or maybe attending unemployment issues, attending balance of payment issues. Like so, those are the kind of development financing function in general. But there are some couple of questions under the MCQ. So going by that, you might have understand as well where what are the key development financing activities. So if the time permits, we'll do that questions. But if not, there are I think two recent papers they have asked about what are the functions coming under development banking. So you need to think about like infrastructure, maybe agri, housing, industries. Those are mainly development. And if it is something related to commercial banking, trade financing, working capital financing, so you can skip that type of a answer. So is it clear, Prati?
Yes, sir. Thank you
Right.
very
So we
much.
will try to do it when we come to the sort MCQ questions, right? So Very good morning to others. Actually, we just debrief kind of a question where actually wanted to know what are the exact functions coming under the development banking. So we just did a kind of a brief, and there are a couple of MCQ questions to that effect, so that you can get to know better when you undertake those MCQs as well, right? So what we have been doing so far is basically we discuss main feasibility or viability items under the uh, uh, project financing or the project appraisal. So we have concluded one or two actually, and then we are trying to understand further going forward. Any questions that you come across during last session or even the previous? Anything that we need to have? Nothing? Okay, then we'll proceed from there onwards. If you do have any questions, yes, please, ask so that so we are like anyway, some of those things actually we can take it up later also, but better if you do have anything even right now, so you can ask it and so get that clear, right? So now we try to understand about management appraisal, or maybe that's about how the promoters, right? How the promoters are going to run the particular entity or the project, like so the capacity of the people behind that. So generally, like we spoke about market, we spoke about technicalities. So the market appraisal is totally about the market potential. Technical appraisal is totally about technical support, and then entrepreneur management appraisal is about the people who are willing to run the project. So then, like if you remember, in case of a commercial banking or commercial lending, also we try to understand the people, their capacity, their skills, techniques, qualifications, right? So their management sort of attitudes, right? So those are important. Similarly, here also we try to understand what are the the entrepreneurs or the management uh, capacities, capabilities available to run this project live. First one, quality of key personnel. Who are the key personnel? Maybe the managing director to chairman to director board to senior management. Like so, they are the basically who are willing to, they are aiming to run this particular project or the business. So then we look into their capacities or their skills and their aptitudes into integrity, reliability, competence, qualification, and experience. Whether the team is balanced, like so, everybody is like engineers, everybody is like marketeers, everybody is lawyers. Probably it might not work. So better you have a composition of different expertise, because the project requiring different expertise. So how do they face with the risk? Like if the the anticipated risk, how they are going to face it out, right? So whether they have the capability, so they have handled similar type of projects, they have kind of a links to get the things sorted out. So like that. So we try to understand their capabilities and their potential to run this business, right? We'll further understand with an example also when going forward. All right. So yeah. Right now, example, let's say now client who is having business experience about 10-15 years with respect to one industry. I think the common one we have been so far taking is, say, it's rice mill. So very good at rice milling, have everything done with respect to the technology too, and so everything is covered, and every bit and pieces is is well versed, right? So that type of a gentleman, now he is coming and asking to open up a, say, fish or the or something about factory related to frozen or maybe export purpose fish manufacturing processing. So probably you might have an issue with his experience to a new project, new area. The relevancy is the question, right? Good that we are happy that they have relevant business experience. Sorry, he has the business experience, but the relevancy is the big question for you, right? Whether to you are like um, willing to take his word saying that I am very good at this, and then I can also do it in the fishing segment. So probably you might say no, it is Chandi, you say it's can't hear. What about others? Rachini, Ravin. So Chandi, please log out and log in again. So probably you might have some issue with. Let's say now whether they have the particular people have experience in another sector will work for the a new one. So that's what we wanted to know, right? Or we want to judge. Probably we might say no, it's not adequate. Because why? Because it require different exposures. Like if it's a hotel sector, there are different exposure and experience requirement. Tea sector is further different, garment further different. So then what could be the scenario here? If it is so we say that it is not adequate, right? The management capacities and skills are not enough. So we are unable to finance because there are some lack in entrepreneur management capabilities, means that there may be management risk. So then what should be the possibility? The one possibility could be, because the entrepreneurs are well versed in the experience in terms of one area, they can hire and deploy a very good people finding out from the industry which suits to the new business, new project, right? You can hire because you have enough money, so you have a good network. So that what you could do is you can go and hire people to run the kind of the business, the proposed run. So that's how we are going to address the particular issue, because otherwise as it is, as a bank, you might not be able to answer, or you might not be able to provide an answer for that question. Okay. Then we need to know about environmental appraisal also. Like if you remember, we have done a pestle analysis some time back, right? So that is the exact tool that we are trying to understand how the environment is. So using the pestle analysis, you can undertake the environmental appraisal, environmental, the impact towards a project, where PESTL stands like political, economical, social, technological, legal, and environmental within that also. So we go each letter and under checklist and see whether that we have adequate support, adequate things to cover the environmental impact towards the project. Example, say the political backing, political stability, the government's some kind of policy decisions toward the industry are supporting or not supporting, or maybe global impact like GSP plus, EU sanctions, maybe some other HR, UN issues could have an impact in the bigger industries we are talking about. That we need to understand. Maybe in terms of economic, what's the balance of payment, inflation, unemployment, GDP growth, right? And the debt components, paying off the debts, very important, right? Because those things will have an impact in a bigger way, in a country level, and then obviously it will have an impact on the projects that you are going to finance. So that's what we try to understand here, because if you are not thinking in that way, like a macro level, you may not be in a position to finance or understanding the project very well. But let's say, coming back to a question like then maybe political, economically, we are very not supporting, but still you can do a micro loan, like maybe 10-15 million loan to a hardware merchant, or maybe a supermarket guy, or like that, because that the overall the factors that we were talking about may not have a bigger impact on this micro type of businesses. Like, under the commercial banking, you said the 10 million loan to purchase a adjoining land. So possibly that, having so many outside legal political issue the country is facing may not have a direct impact. Some way there may be, but not exactly to be worried about. But if you think about, having a highway, having a electricity, like for generating a plant, right? That type of project obviously will have an impact. The reason the US is trying to come and have a joint or sort of a venture with the Sri Lankan company about energy provision in Sri Lanka will have a bigger impact if you are part of a financing to that maybe one of those outcomes. You understand? Because now even country is at large also, like, have different opinions, and maybe US is, have a different, maybe China will have different. This government probably might have one way, the next government could be different. India's involvement, like, so in the bigger picture, you have some issues. So those things to be tackled through this, pestle or the environmental appraisal. Say even now, harbor, right? Now they are going to have the West Harbor being developed through Indian company Adani and John Keels, right? So suppose now John Keels is coming and asking a loan, maybe syndication loan about say 10 billion. So a couple of banks got together now have to do financing. So in that big picture, yes, pestle is very important. Now we need to understand what about country to country, bilateral, by the China's impact, and then what could be the potential of having a West terminal, what could be the impact to the Indian harbors out there, like that. So many studies that you need to undertake. So based on that, so probably you might say, no, this is not viable, right? So in our perspective, this is not viable. So as a bank, I can't, enter into funding under the consortium. So that's how your risk appetite. Maybe another bank would be able to do it. So like that. So those are the big projects, like that's we talk about the project lending, infrastructure type of financing. So having put up a harbor, but having purchased a land adjoining there, and it's not a thing that you should be very much worried. Yes, you can do some pestle analysis, but the things involved with that, the smaller projects may not be very much worried, considering the other supporting factors. So any questions? Any questions? Okay, let's move on. Then we need to understand the financial appraisal. So we talk about market, we talk about technical, we talk about management, environmental, then the financial. Financial is again playing the bigger role because now whatever said and done, set aside all feasibilities, financial is very important because that will tell you whether the project promoters can service your debt. If you remember correct, we have done separate financial spreadsheet analysis, right? Where we try to understand different ratios and different analyses, right? Because why? We wanted to ensure that, say, let's say if the existing people, they are running the business in an understandable or in a profitable manner. And then when coming to the proposed project, again we need to understand, right, whether they are in a position to service the debt. So in that sense, like what is most important thing is like, so we will take inputs from other feasibilities like technical, marketing, and those assumptions will be used to project the financial statement. Like, so maybe you have profit and loss, balance sheet, cash flows for the historical basis, or current and futuristic also. In future, what happened is, rather than you take all as past data and see what is my future probability, profitability, and future assets level, you will take some inputs from the other feasibilities, and you see whether what's my profitability level in future, what is my gearing level in future, what is my efficiency levels in future. Like what we have done previously, we try to do it for the future also. So based on that, you see whether the client can repay the debt, what is the interest cover, what is the debt service cover, what's the gearing ratio. So important for you to understand client can service the debt in future. So similarly important, in addition to undertake the financial analysis, investment appraisal. So we did take several investment appraisal techniques as NPV, IRR, and like that. So those things also important, because whether now when customer comes and tell you, right, so I am going to do this project. So what you have to do is whether you try to do independent evaluation on the investment feasibility. That's what we did in section 8, I suppose. Then suppose investment it is feasible through NPV or whatever, then you see with the financing feasibility, whether it's like financially capable to service the debt. Right? Investment, yes, you have NPV and everything, that's fine. Then you see whether how I'm going to do this financing, with 100% equity. Equity plus debt. Equity, debt plus joint venture. So like that, there are several methods of financing. Right? So then you will see if it is debt to equity, what is the debt to equity ratio? What is the interest cover ratio? What is the other the factors that we need to be worried about, debt service levels, interest cover service levels, and those things. So based on that, you say the financial this is also viable, right? So that's another aspects that under the appraisal that we need to be aware with. So basically what we are trying to understand here is, using some ancillary discussions previously held, we try to apply those things under different feasibilities. So we try to understand different feasibilities using these techniques, whether so it is acceptable in terms of financial perspective, it is acceptable in terms of uh, technical feasibility, technical perspective, acceptable in terms of marketing. So like that, so we try to do those things in using the techniques we learn: working capital computation, break-even analysis, investment tools, financial evaluation tools, right? So those non-financial tools, right? So we try to use those to understand each feasibility. Hope, right, you are getting it. If you have any queries, please raise it, right? Because you need to understand exact, the sort of the macro approach that we are taking here. So we did microfinancing, we did SME financing, now we are doing project financing. So under the project financing, this umbrella, there are several things that we learned earlier. So we try to put it into a single perspective. So under within that, so this is the project financing umbrella. The last one we try to understand here, the economic appraisal. There may be so many other things also we can do it, but economic appraisal is also very important. That is, we spoke about these projects are big, right? So then it has an economic impact towards the country. So you need to know whether these projects will add value to the economy or not, right? Example, labor intensity. So Sri Lanka is a country where we are still labor dependent, right? So if the project is coming and it require more labor, so it's good sign, because you can give more employment opportunity, right? So then you can reduce the unemployment problems in a country. So like that, that's it, good. But vice versa, saying that no, it is not always you encourage the labor intensity project. There may be automation required also, because if the world is going to that level, then you also have to be that level, right? So you can't run it only the labor intensity always, like garment, yes, that's a labor intensity. But right now, also see that most of the things are with automating. Right? Recent tire factory, maybe 1 year down the line, they started in Kalutaroso. It more or less automation, right? So those days there may be so many labor involvement in tire factory, but right now it's not so. That's a world trend, right? I mean to say that better in if the country require the employment opportunities, but it is not only the reason to select a project, but if it is so, it's good depending on the country's requirement. Export. So a country like Sri Lanka is very much interested to have a factory, the projects relevant to export oriented project, because we need dollars, we need foreign currency. So it's good that if we can have value added and export products and services to other countries. So that's one of the main aim of this government, and even going forward also, I think that's the way where that we need to focus. Import substitution, very important thing, because right now we are like importing so many things to our country, from the it could be like merchandise to commodities to like essential to non-essential, so many things. But if we can promote industries where production is more relevant to import substitutions, very good project, right? So when you do more and more import substitutions, that itself tells you that you are trying to save so many what do you call foreign exchange, right? Because it anyway supports to the local entrepreneurs, and maybe more employment opportunities, while you are preserving the foreign exchange, right? Local raw material usage, that's another important area that you need to understand, where rather than you depend on imported raw materials, if you can use local raw materials, I think that's very much encouraging. And then value addition, rather than you take something and you packet it and send, if you can process it and add some value and send, then you can get more income. That's what the economic perspective that we are very much concerned with. Other economical benefits, like if it has an support to balance of payment, employment, the economic growth in regional growth, right? So that is also important. IRR, we learn about that's internal rate of return, basically under the financial IRR, but there is another method, like another extension to the IRR, where EIR, economic IRR, where in not only the financial cost, it also talks about the economic cost, like it supports to the environment and damage to the environments. Like we try to take some economic impact also and do a EIR. There again, so you get a kind of a better rating and then say this project is viable. So this basically tells you, in an economic perspective also, we need to see this, right? So if it is supporting the country's economy in different way, then we say it's a good project towards the country. Because why that we are trying to so much on evaluating this appraisal is basically these, I was telling about in section 8 also, these are very big projects, a complex, future oriented. This talks about the survival of a particular entity or the country to some extent. So that's why we are very much interested, right, on these areas, right? When you talk about the project appraisal, yeah, it could start from 10-15 million and it could go to the billions, right? Even the 10-15-30 million project also, that you can look into this feasibility angle. What's the management feasibility, technical feasibility, and based on that you can take a decision, right? Now, example is something, say maybe you are want to finance say a small machine, lathe machine to a factory, right? So ideally we could discuss is like, so right now we are doing very well, so you have some adequate cash flows that's based on the balance sheet and P&L existing basis, and then we will give you a loan, and 3 year, 4 year, 5 year, so you are in a position to pay it back. So that's what general understanding, right? That's a commercial lending, we say. But you can think about it in a project angle as well. Oh, how we are seeing the project angle, not very going to the very far, but think about the new machine. What is the value addition? One or two labor, employment. What's the capacity? What's the raw material? What's the pricing? What's the value addition to this business, like that? So you can think about, say, having a new machine. What could be the value addition? What could be the addition to the P&L profitability? So those things you can do separately. Say, new machine per day, this type of orders, this is the price per order, so this is the income, this is the cost. So like that you can do a separate P&L, balance sheet and cash flow for this proposed project. I mean, this purchasing the lathe machine, that you can do. Very simple. That will tell you, what at what level it's breaking even, and whether it's like making a profit to this existing factory, right? What could be the repayment, right? So whether it's good to take a 5 year loan instead of a 3 year loan. So everything can be done using the project financing tools like what we have discussed here. I mean, it may not be necessary for all the time go into the detail, but if you require even a 5 million, 10 million, 15 million loan, can be seen, can be evaluated under this project financing, project appraisal techniques. But for the easiness, because it's a simpliness, we might not go to that level, because right now they are generating adequate income. So you based on that, so we'll take call. That's it. Any questions? Mm. Is it okay?
Yes, sir. Clear, sir.
Right. So we'll proceed then. I mean, those are not big deals, but just have an idea where what are the areas that these things actually I'm not going to do in very detail, but you can leisurely go through as additional readings. Key items, steps in project appraisal, right? So go through it, whatever things. Right. With that, actually, we'll be able to complete the project appraisal area. So what we'll try to do is we try to do some since we have some more time today, we have to start another session, that is the last session, so we will take it up next week, and beyond that we can start the the past papers. And I think, as you all know, that what we could do is, like, give me a minute. The revision classes are going to start from first week of second week of November. So we can continue classes up to first week of November. So we have couple of days to go. So one more days is required basically to cover one session, and then thereafter, so we can up to that we can proceed with the questions, right? Let's see whether that I have. Right. This is the kind of, I think. Yeah, this is the kind of a question, Rachini, I suppose you have asked. Most important development aspects of discussion the development banking, industrial, agri, import, export, and housing kind of thing. Right here, why the others are not coming is if you take um, industrial project, agri, housing, here industrial, agri, import, export, and housing. What's the difference between here import, export, development? Here housing, yeah, the main item missing in the earlier could be like, yeah, it's something about industry, it talk about agri, because this is the housing is something that we might not think, but housing is also part of the development financing. When you say import and export development, it's not like, day-to-day trade financing, but if it is something a trade financing, that you can exclude that. But when you take about import export development, is basically this is something export oriented businesses, import substitution business. So that's why it is coming here. It's like yeah, maybe not a very hard and fast rule to say that what's like development banking, but when you do one or two questions, that it automatically comes to you what are the key areas in terms of development banking which support the country's economy. If you have any doubts, think about in a bigger way, where what is the impact towards the economy, right? Okay. So before we start in that, I think if we can see whether we have the last year paper. Can you see a paper like
See, sir.
all right, that's like this question has two sections, like this is the paper, because this is like the last year paper. So since that Rachini also asked a kind of a question, so we'll start like the question by question, and since that we have like some more days to complete, so I thought to start with the the MCQs, and then we will go to the other areas, right? So what we can do is collectively we can do the paper and discuss, because this is more relevant to recent trends, right? So what we could do is so we'll take maybe a minute or two when answering these questions. Once you have answered these questions, we'll go to and the answers, and we discuss what's like the areas that we need to worry, right? So this is the first question. What are the types of banks come under development financing scope in an economy? So this basically, this question is a repetitive question. It's a third straight time. Previously, there were two occasions, same questions has been asked. So that's sometimes a beauty, because if you do past papers for last 5 to 6 papers years, then you have automatically some of the questions being going to repeat, right? So let's see whether you have an answer for this. So first we go for the 10 quick MCQs, and then we'll discuss the answers, right? Hope you can see the question A. You can see it, right? Everybody can see this? Rachiti, can you see the screen?
Yes, sir.
All right. Okay. Right. What are the types of banks come under development finance scope in an economy? A, B, C, D. Industrial development, commercial bank, regional development, housing development. So bit of differently they have put as a question. Let me know once you finish this, go to the second one and we'll continue like that. Take a separate paper and you can do it.
So I think you can move the paper.
Okay, so you have done 2, 3, 4, then we go to the fifth one. Yeah, fifth. Hope you have done that also, right? Micro entrepreneurs define A, B, C, or D. Right. You go to the 6 and 7. You can see the most are required what we are relevant to recent things we learn. Hope you have done that also, right? Micro entrepreneurs define A, B, C, or D. Right. You go to the 6 and 7. You can see the most are required what we are relevant to recent things we learn. question 5 and question 6. Please let me know once you have done, right? So we can move the rest of the papers, questions. Have you done, Taruka, Padmendra, Chagita?
Done,
6
sir.
and right. So we'll move to the rest 3 of those. Eight, 9, and 10. How development banks can contribute to the development of an economy. NPL is useful in project evaluation. What's meant by the critical path analysis in project management? Take 2-3 minutes and then we'll Hope you have done it. Can we move forward? Shagita, Samindri, Rachini, can we discuss?
Yes, sir.
Okay, so let's see
Okay,
just
sir.
the answers and then we come back. Right, so first, before going to the essay type of thing, so we'll go one by one. Right, answer for the first one, what they have asked is what are the types of banks come under development financing scope. So earlier they asked about the functions of the development banking or development financing. Now here, instead of functions, they have asked about banks, which means they are the one who undertakes those activities. That's why I was telling you there were two occasions the examiner provided the same thing for us, right? And instead of activity, this time he's asking the banks who undertakes those activities. So what was your answer here? If you go by the last past papers, you answer, you have seen it also. What do you think? A, B, C, or D? Most appropriate or relevant? What do you think? Rachini, what was your answer based on the previous?
I got it as C, sir.
C. Padmendra? Taruka? What do you think?
C, sir.
C. Padmendra?
I also marked as C, sir.
Right. So what do you think? The examiner's answer was what?
Plus D.
D. Why?
It's a confusion, sir. That's why when I answered.
Right. That's okay. Now, if you see in general, industrial development, correct. Or industrial, it's something about infrastructure, right? More or less, we can, think about a correct, because the project financing is one of the, area like industries, right? Infrastructure, like we talk about harbor, it coming under industries or infrastructure. So it's the tea factory or whatever these things is coming under industry. Fine. Agree. Agriculture anyway, it's coming under the development banking, development activities, because one of the main functions of GDP, agri area, right? Exim. What is Exim? Earlier it was there export and import activities, right? Because we try to finance activities to relate export, and also we try to do some financing to activities to support import substitution. So that is Exim is also coming. Housing development. Earlier I mentioned you that though we think about it some consumption activity, but it's no more a consumption, because now it directly supports the clients, like the people's, like maybe living or the lodging purposes. So that's why, because the people has to be support some basic economic need to go to next level. So that housing development also, the development words also they have mentioned, they are to promote the customers' housing needs. So that's why the examiner has up to that. If you see the previous one also, they mentioned about industrial development, agri development, export import development and housing development. So why not the regional development comes here? So that you go over the regional development. No? Regional developments also correct, but the regional development is within this industry agri or exim. So we can categorize into that level. Where in terms of, let's say, if you take up some province and then you undertake some development activities there, what are the development activities you can do in a province, in a region? It could relate to infrastructure, it could relate to industries, it could relate to agri, it could relate to export promotion, it could relate to import substitution. So that's why we try to find out, the best answer here. So in that sense, yes, answer is D. Right? Now, let's say you forget out all those things. And then if these are the 4 areas, 1, 2, 3, 4, see whether what are the if you go by these 4 answers, how can I find the best answer out of that? Like if you take A, obviously you can drop commercial banks, right? Because commercial bank is not coming under the development. So A, you can drop it. Now when it comes to B, again commercial bank is there, so you can drop that. So A and B, obvious no. Then you go to C and D. When you go to the C, yes, you have one regional development, the other housing development. But now you need to take a call on regional development and housing development. Then you need to try to think about, right, when you say region development, that again it's a good move, because in a country, yes, rather than you talk about the total country, you need to do regions, and then it will automatically come to the country's development. That's fine, right? But again, think about coming under regional development, what are the things we will do? In regional development also, you do agri, like industries, import, export, those activities. So hence, automatically, when you undertake industries, agri, like the component of the GDP will result the regional development, right? Then there is no difference between industries to agri to Exim Bank and come to the regional development. In this answer, you have housing development, a separate line. And previously also, we have seen that housing development also categorized under the development banking in the previous maybe 2 or 3 years back. So based on that, the best answer here could be D. That's how you have to argue and give the answer. But now going forward, now always things when come to the development banking, what are the key areas in the economy? You talk about industry infrastructure, you talk about agri, you talk about import export, right? And then something related to the housing related developments. That's why that's how you need to argue and put an answer. But now especially the issue here is, that's why I want to take these questions first. Now when you see this, if you like the first question, right, so some kind of doubts here, right? You see, just see that's it's something almost correct. If something about in the case of D, if something about commercial bank mentioned in the D, obvious answer would be C, right? Because commercial is anyway not coming here. Or working capital financing, or maybe working capital banks, for example. Obviously, answer could be C, right? Here, housing development is there, so that's why the issue created, right? So closely check the answers. Now, what you could do is like, don't be hurry, because that you can answer this question within a minute or two. No? So once you answered, if a correct answer, it's a 2 marks. It's a huge mark, right? 2 out of 100, right? So if set aside everything, if you want to pass the exam, you need to score 45. So 2 marks out of this is like, then next is 43 to, collect, right? Within a minute, you can, get that 2 marks. But in order to get that 2 marks, it's not easy. The questions may not be, put in very understandable or maybe non-complex way. Big complexity is there. So you need to use your brain and see whether, what happened in the previous papers. So it's a repetitive question, right? And when you go to 1, 2, 3, 4, the A and B, obvious no. Then C, D, you need to argue. So there are 3 is in line, 1 is going to be different. If you remember correctly, yes, the previous 2 occasions, yes, housing development has been categorized there. But here comes to housing development and as well as in regional development banks, what the regional development banks do, they also do, like if you take what are the RRDBs like these days, so many, Rajarata Ruhuna kind of, what are they going to do? They do every sort of activities, right? They do export import related, some micro and SME financing, right? Value addition activity. So they do the same thing which has been mentioned A, B, and C, like industry, agri, and EXIM. So what's the difference between housing to the regional development? Housing could be new sort of a paradigm, which is undertaken by the development banks, maybe regional development banks, specified like specialized housing banks. So that's why this has come to here, because maybe up until last 5 years or so, the housing need is not has been taken very prominently in Sri Lanka. But right now, you can see there is a huge support from the government to banks to promote housing, reduce interest rates, and so many tax concessions and all that. Because the people understand, the government has understood that it helps lots to people to come up to the next level. So that's how you need to argue and get the marks. I think going forward, like there may be not the same questions to be repeated, but try to argue it and see what's the best the answer, right? Not very easy, but again when you're arguing, so you might not be in a difficult wicket to get the answer, right? Any further clarifications? Right. So what could be the answer for B then? Question 2. Any thoughts? A, B, C, or D? Unique venture with a beginning and end carried out by the people to meet established goals within the parameters of cost, time, and quality. Set of activities developed by the promoters to complete a venture. A temporary endeavor. Any activity in large scale to promote products or services. What's the best answer there? What did you put? Rajini, Taruka, Padmendra, Chagita,
I
Chamila?
got it as A.
A.
Sir.
Okay, Taruka.
A, sir. A.
Taruka, what's your answer?
A, sir.
A. Padmendra?
A, sir. A.
A, right? So because it's anyway very clear, right? So when you see, the B also bit of answer we can think about, but A is much better. Unique venture with a beginning and end carried out by the people to meet established goals within parameters of cost, time, and quality. So the take-home point here is the next paper, the examiner would give us, what's the question? Not underline. Write a short answer on definition of the project. There may be so many things you can write it, but all answers could be correct. But this is more have cost, time, quality, because everything has been incorporated. Who basically develop sponsors the people who are willing to complete that. It's a kind of a particular exercise, particular venture, set of activity. Beginning and end, because in a whatever project, so that's a starting time, the end time, that's a beginning and end. So this is a good definition you can keep in your mind. Maybe the next paper or even after that, he might ask, write a short description, definition, what you understand by the project. Short line, you can get 2 marks. Maybe even next time. So we can expect in the 2022 January, possibly he would give that, because the people, that he might not give it the same and for the underline, but it could be something, the short answer to be written by students. So keep that in mind, because you see that trend. Several papers see that, some questions being repeated. So this could be another repetitive question, because this was asked sometime back, 2015, 16. Yes, it was asked. Now it's in 2021, because these type of, that's the time I always encourage you to undertake as much as past papers. do as much as possible. I think the IBSL has shared the link. Papers are there from 2014 to up to now. I mean, take the papers and do it. Start with MCQs. So there may be at least 10 into 12, 120 questions. Out of the 120 questions, maybe 30, 40 questions are the same being repeated. So if you do this 120 questions once, twice, thrice, obviously it gives you a lot of knowledge about the syllabus and the area where the examiner would give the questions. Since the repetition is like maybe 15 to 20% are being repeated from the last sessions, it's again very easy for us to get some scores, right? Hope you got what I meant. Any questions you can ask, right? Then 3, 4, 5. Now, what are the answers for the question number 3? I think that has been done. What's the most appropriate answer? A, B, C, or D?
B.
B, yeah.
B, sir.
B.
B.
Right. Anybody is having differing answer? C. Samindri is coming with C. Yeah, Samindri. Now, if you take B and C, right? C talks about number of years taken to cover the investment. That's also correct, but partially. Why? There's a better answer. The time takes to receive cash flow sufficient to cover the investor's initial investment, because it talks about particular investor initial investment, time taken, right? So all like the second, if you don't have answer in the nature of B, we can take the correct answer C. But when you say the B is betterly explained than C, then we need to go with the B, answer B, right? Because otherwise, like if you take C, D also, period measures how long something takes to pay for itself. Like it's again we talk about something you pay and you are getting return, right? So that's also correct, but it's not partially and not completely. So then since there is a better answer, so out of the B and C, we need to select answer B, right? So think in that way, because now not the all answers, if you take have that similar weight on the as the correct answer, but maybe one or two we need to critically select. Here B and C, the better answer is B, right? Question 4. Commercial bank reluctant to finance long-term projects. This is again repetitive question. Why? A, B, C, or D? Maturity mismatch. Yeah, Samindri? Yes, yeah, Samindri. If it is in between investment, that's also we need to correct it. But like it doesn't exactly explain under the C, right? So generally, as per the correct the initial definition, it says the initial investment, but generally if whatever in between it happens, we also take that into account when it's going to recover, right? So but the original definition is like initial investment when you are going to recover, but for the benefit of the investor, whatever the investment he incur in between, so we'll take that into account also when we say, before the taking the decision. So that's why they went for a B. But maybe you are correct, you are thinking because initial investment there, but the C there, it's a, generally we talk about investment. It doesn't say the initial or in between or the at the end of the tenor. So probably you have taken that route to select the C. But ideally, the original definition come for the payback is like, the when we are recovering the initial investment for the better in terms of the value of the money. So the risky, in order to minimize the risk, when we are computations, we will see what are the interim investments, and that when those investments also recovered will take in terms of computation. But original definition came as the time taken to recover the initial cash flows. That's why examiner has gone for the B. But when you say C, still when you say the investment, to cover the investment, it doesn't say what type of investment. So initial, interim, so other investment. So that's why he preferred to the answer B, right? Will it be okay, Samindri? Bit of complexity you might have gone through. Whenever we do computations, we try to recover all investment, but generally the examiner went with the initial definition for the payback, right? Okay. Why commercial banks reluctant? A, B, C, or D? Again, bit of tricky. What could be your answer?
A.
Yep. A, B, C, or D?
A.
A.
I got it A, sir.
A. What are the differing answers? Anybody has different answer than A? Answer is A, right? Because there is a maturity mismatch in the sense, like in development banks actually now they source financing aiming for the long-term projects. When you say long project financing, it needs money for longer tenure, maybe 7 year, 8 year, 9 year, 10 year, like that. So you need to source the funds for that also. That mainly through government to government, some other foreign banks, refinancing credit lines, right? So because now you can't, take the customer deposits and give these things, because the customer, so they want money back in year 2, 3, like that. Short-term financing, short-term requirements, right? So probably might not be easy to use the short-term funds for the long-term finance. So that's what they call the mismatch, liquidity issue. So hence that give for the answer A. Prashant, any question? You have raised your hand.
Yes, sir. The previous one.
Yeah.
Can you describe the fourth one? That is the D answer. What is the difference? It's, I think some relevance to the D answer.
Yeah, that's there also. You're correct. That's period naturally measures how long something takes for pay for itself. So that's in general, it's correct. Right? Let's say if you have some sort of kind of a purchase something, and then after the whatever the receiving benefits, how long will it take? Like In general,
Right.
yeah, it could be correct. But when you say the payback,
Right.
right? The payback kind of a definition. So payback is talks about the project specific,
Ah,
right? That because if you don't have the answer B, possibly even C is correct, D is correct. In general, whatever your investment, it's not only a project. It could be
Right.
something, maybe purchasing a laptop, so investing in a particular land, so like that. So generally, D is correct, C is also correct.
Right.
So, but when you have B, C, and D, because as per the original definition, it say the payback is time taken to recover the initial cash flow. So that's why they up to the B.
Right.
Right. Thank
Okay.
you.
Thank you, sir.
On question number 5.
So
It's
break
actually, yeah, yeah,
no profit, no loss. So that is the time that that investment recovery. So
yeah.
why can't we say that answer is
Answer A. No, answer A is the time taken to reach the break-even point. No,
yes? So the
right.
break even is no profit, no loss, no. So
That's
that
right.
is the point that we are recovering our investment.
No, that's a
So
bit different, Judy. Then when you take break even, it talks about profit and loss accounts. In a payback, you talk about only the cash flows. When you come to the profit and loss account, even depreciation could be included in arriving the profit. But in cash flows, we are disregarding non-cash flows when deciding this payback or NPV. The two concepts. When you arrive in the profit, you will take not only cash flows, even non-cash flows has been taken into account in case of a profit.
okay, sir.
That's what the break even is different from the payback, because two things. One is basically recorded reported tool, like break even is something, profit loss kind of thing, but ARR is more or less relevant to profit loss related investment, the tool. But payback, you disregard about this the depreciation and all that, only you use cash flows. That's why we use the cash flow word under the B. Specifically, we talk about cash flows. That's why we omit the answer A. Okay, so what could be the answer for question number 5? Actually, these questions has been given to us by the examiner using general, circulars being forwarded by the central bank during the last year about microfinancing, about new credit lines. So that's importance of being aware with recent guidelines or recent communique issued by the central bank, right? This anyway, actually, when you say microfinancing, and if you go to the central bank or to go to the Google, and you can microfinancing regulations, we can find that. But this has not been tested previously. Even the next question also not been tested previously. But examiner wanted us to refer day-to-day happening. And now probably we actually expected some question relating to the moratoriums, but not many questions coming from the moratorium, but except this the question number 6, the kind of a credit line that they granted to support the COVID impacted clients. So like that, so we need to be aware with what's the recent circulars like put forward by the central bank, and then there may be a chance of getting questions from that area. So out of this 4, what could be your answer? A, B, C, or D. Actually, this is basically we can't argue on that, but anyway, it's there in the microfinancing. What do you call central bank circular? Answer there is C, because it's about annual turnover less than 15 and number of employees less than 10. Right? So going forward, if the examiner would provide this again, so you need to know that this is less than 15 million and the less than 10 requirement. Yeah, number of employees and annual turnover of less than 15, right? What about SME turnover? Any idea? Because previously it has been tested as SME turnover. What could be the SME? Less than what? How many millions? Anybody?
750, sir.
Yeah, correct. SME 750, because it has been tested previous occasions, the SME turnover. So this time it could come again, right? What are the other criterions in general, in worldwide, in defining SMEs? There are 2 or 3 criterions being used to define SME. Anybody can remember?
Number of employees,
Number of employees,
turnover, annual turnover,
annual turnover. There's another one. Anybody can tell? Number of employees, annual turnover of the business. Third one, asset size, the value of the assets of the enterprise. So those are the 3 being used to define SMEs. You know, it's country to country different, but there's no universal definition for the SMEs, but those are 3 criterions being used. And recent, the criteria Sri Lanka adopted is turnover, that is 750 million and below, are being classified as small and medium enterprises. Right. Ashini, any question?
Does it have some number of employees?
For that definition, we doesn't have, but there are some other definitions which relevant to SME was like below 300. But if you go by only the turnover, it's 750 million. So that's been the one common definition right now being used. But if you remember correct, when we discussed the section 2, there are several other definitions to support the SMEs time to time. Maybe particular credit line would come and tell this is the definition for SMEs. Like there, we have seen 750 million turnover and employees below 300. And even recently, we got some circulars by central bank for funding requirement or maybe moratorium requirement. Then the SME definition has been increased to 1 billion, not the 750. 750 is still there. That's for the financing for generally, but the particular support scheme came with the annual turnover not exceeding 1 billion could be classified as SMEs in order to provide the moratorium concessions. So it's like, you know, time to time it's changing, but you need to know which, you know, the classification is relevant. Like moratorium purposes, it's 1 billion. Generally financing, general understanding, it's 750 million, even for the capital adequacy and all that. Right now we are using the 750 million turnover for SMEs. Any questions?
So number of employees 300.
300 or below. That
And
is not
asset
relevant to this 750, right? Now, if you take turnover criteria, based on that, we define 750 million or below as SME enterprises. Right? There are another definition is 750 turnover and employees are below 300. That's are 2 different definitions, right? Because whenever the central bank is now is being, you know, given okay to define SMEs only through turnover, that's 750. But there are some other entities, maybe other credit lines has defined the SME differently. In one of the definitions, it's tell 750 million or below, number of employees should be 300 and below. Right, but generally, if it comes the questions, it's more or less based on the central bank the definition. So you need not to be very much worried about the the employment. But if employment number of employees are mentioned, but keep that mind is 300. Like that, if it comes like SMEs also could be defined in Sri Lanka through turnover 750 billion below and number of employees less than 300, that should be the answer. If no employees is mentioned, then it's like 750 and 750 million below. Hope it's clear. Then we'll see rest of. What's this one? Special credit support scheme was introduced to eligible SME respective banks during January to December by the government through central bank. For the purpose for this scheme, SME shall mean borrowers with. What could be the answers? This is a particular credit support scheme introduced by the central bank, which has actually routed through all the commercial banks and the development banks. So this is exactly I was telling, because if that you are in a bank where maybe part of this project, you know exactly what this circular, what we have done, and kind of. If you are not in basically credit related, yes, probably you need to refer these type of circulars time to time, because sometimes these are in the papers also. So what I advise you is before going to the exam, like take one or two banks and go to their websites. Like maybe you can select one commercial bank, maybe two HNB or commercial bank, and maybe one government bank, Bank of Ceylon or People's Bank, and go to their website, and then they specifically say what are the credit lines available and those concessions. So study those things and get not everything about 4-5 features will do. What are the eligible segments? What are the eligible customers? Minimum, maximum amounts, and collateral requirements. So that's it. Right? So there are 3 or 4 areas that you need to be aware with, because for the examination purposes, the examiner could pick maybe very high level numbers for this paper. So this is one of them. Right? This is a circular where it talks about the eligibility segment. Turnover cut was given. So based on that, the examiner has given this question. The answer for this was like B, because this specifically talks about SMEs. Then up to 15, it was the micro, and then 16 and above and up to 750 was the SME. But here, if something to mention that it is above 15 million, you can take it that. But here he has specifically put between 50 to 600, 15 to 750, 16 to 750, 16 to 600. There are 2 high levels. 600 was sometime back was the SME definition, maybe 2 years back or so. If you keep that in mind, you might go, 600 is the SME definition. No, it has been increased to 750. So the 750 is the SME cap. Then microfinancing cap is 15. But if it is say above 15, you would select here. But when you say between 15 to 750, it's not the answer. It's between 16 to 750, because up to 15, including 15, is the microfinancing. So small change. So probably you might be in a not a good position to pick a correct answer. Right? So ideally the answer could be 16 and 750. So A, B, or C, or D, answer is B. Right? So sometimes you think that, when it comes to the MCQs, it's not easy. Right? So my advice is generally, when you are attempting MCQ or whatever the question paper, you should not take MCQs as your first question. You have to do the first question could be microfinancing, maybe SME financing, maybe project financing, a general question, or maybe SME product descriptions. Nothing to worry. So you don't feel if anything goes wrong there. No computations. Take first or second question to that effect. Then your stress levels, examination fear, and everything has now could go down. You write answers, you plan your time. First, second question, more essay time. Maybe the third question could be MCQ. Or maybe the third question could be like working capital financing, NPV computation. Because then you are in a set. Then you can take, think, remember, do computation. Right? Third or fourth question. Either MCQ, because when come to the MCQs, you are now not very bit of complex, peculiar. Since we have attempted 1 or 2 questions, you're a bit comfortable. Yes, out of 20 marks, I might have scored 12 or so. So 25 marks I have scored. So when come to the MCQ, if I get another 12 marks, maybe 6 question out of 10, I end up with 37 or so. So you will be comfortable. That is, how you manage your pressure there. Because if you straight away go to the MCQ and you try to do it, maybe 1 or 2 questions we are not very much comfortable, possibly you might not do the justice to the rest of the question. Because very tricky. Now, so far you have seen almost correct answers are there. The examiners put in a purposely, like between word here. It's 15 and above, or 15 or above 15, obviously it's correct. But when you say between 15 or 750, it means including 15. It's not correct. 15 and below is micro. 16 and above is SME. But it's nicely mentioned in answer B. Not easy. Right? So you need to have very comfortable, cool mind answering these MCQs. Suppose if it's not comfortable to you, so keep it not answered, go to the next question and go back to the essay question and come back. Sometimes there are probability where essay questions will have some link to MCQ or vice versa. පේපර් එක කරගෙන යනකොට වාට තේරෙනවා එසේ එකකදී ඔය සමහරවල් තැනක අහ ප්‍රශ්නකින් MCQ එක උත්තර දෙන්න පුළුවන්. ගොඩක් වෙලාවට මේ පේපර් එක හැදෙන්නේ එහෙමයි because this has been done by the one individual. Not many put in questions and do. So there is highly likelihood there is some synchronization in questions. So he will pick somewhere here. එක link එකක් තව තැනක තියෙන්න පුළුවන්. එතනින් උත්තරයක් ගන්න පුළුවන්. ඒ වගේ තමයි සාමාන්‍ය papers හැදෙන්නේ. එතකොට කලබල වෙන්න හොඳ නැහැ. මෙතනදී දැන් like when you take about payback. මෙතන තියෙනවා NPV. So not comfortable. So you go to the NPV paper. NPV question. ඕන එතන payback අහනවා. එතන NPV අහනවා. So probably එතන අහනවා what compare NPV and payback. So you remember something. දැන් ඔයා ලියාගෙන යනවා. එතකොට දන්නවා payback. So what I did was capital investments will recover timeline. So then you can come back. So initial investment, there's a relevance. Yes, answer is that. When you compare NPV payback there and then say it's good because time value and all that. So out of these, I remember sometimes the lecturer was telling me the payback NPV is a very, the proper tool. That comes in mind when you are undertaking this question. එතකොට ඔයා question number 7 එකට આવත් ඔයා දකිනවා one of the best is NPV නේ. මේක දැක්ක ගමන් මට ඒක එච්චර තේරෙන්නේ නැහැ, but one of the best could be like this. You getting my point? So you need to balance it. Manage the stress. ඒ කියන්නේ එහෙම කරපුවාම automatically you get some marks. Right? Okay. Let's move on. Question number 7. Which of the following methods of appraising capital expenditure gives the most accurate comparison of the merits of alternative capital investment schemes? What was your answer? A, B, C, or D?
C.
Internal rate of return. Padbendra, Rachini, Samindri, Judy, sorry, Prashanta. What What's your answer? Yeah, Prashant.
D. They are all equally useful method.
You say B, payback.
No, D. They are all
D.
equally useful
Okay.
method. D.
Okay. But the question is, say, most accurate, right?
Right.
The most accurate comparison. If you were with our the comparison exercise where each one we have been compared, then we have done the class examples also. Out of all four, what gives you the best the tool? What was the best tool? We talk about time value and throughout cash flows. Yeah, Judy.
A.
A. Yeah. Rachini.
I'm thinking it's C, sir,
A.
because of the average thing.
No, discounted cash flow is what you talk about. What is missing here? If you put NPV as one of these answers, you straight away select the NPV. Right? Here, the examiner, instead of NPV, he mentioned it is a discounted cash flow method. That is the issue here. Right? Because how you arrive the NPV? NPV is arrived through, you take cash inflow, outflow, net cash flow, you apply a discount rate, discounting factors, multiply discounting factors with the net cash flow, you get the discounted cash flows. And based on that, what are you going to do? Based on that, you say this is the net present value. So basically, answer is A. Payback is correct, IRR is correct, but payback, you are not taking discounted, or I mean the time value of the money. Internal rate of return, yes, you use the discounted cash flows, but there are some inherent weaknesses there. 2 IRRs, remember? There are some, cash flows, taking after the particular IRR, there is another IRR could come, right? It's a kind of percentage sort of thing.
So by taking that average thing, it couldn't be the most accurate comparison, sir.
What is the average thing?
We are taking one IRR and then taking another the average of the cash flows that they are taking to take the internal rate of return.
Yeah, that's correct. But only thing is that when you take internal rate of return, what happens is there are some inherent weaknesses of the IRR. If you remember correct, there were maybe some projects we get 2 IRRs. So then we don't know which one is correct. Why it's happening is because there are some cash flows occurring after for the one particular IRR that gives you again, negative to positive. There are 2 points. That could be, minimized using the NPV method. Even whatever the whatever the later cash flows also you discounted to today's value. That's why we prefer discounted cash flow or the NPV method. So as whatever we're learning, also we found out that because time value is taken into account, throughout cycle cash flows are being taken account, and we know you use the other factors into account using the discounting factor. The other risk factors also taken into account. Hence, NPV is best. Because when you come to the IRR, you just get a rate and then you have to think about what are the other rates to compare with. But here, discounting factor is being decided using the other factors also. Maybe the risk premium could be added, some other issues based on the discounting factor, you decide the NPV. So ideal out of 4 tools is the NPV. But here what happened is, because they have not given that word, instead they give the discounted cash flow. But discounted cash flow method is none other than the net present value method, right? So maybe ARR, it's not good. Payback is not again good. IRR is, okay to some extent, but still it has some issues. But IRR and NPV are both taking time value of money. However, due to inherent weaknesses of IRR, we prefer NPV as the best tool out of these 4. So that's why we go to the answer A. Any further questions? Right. So then we see other 3 questions. Generally, what the contribution of the development bank, right? There are several, things that you can, you need not to write almost everything. Maybe 2 points would do, right? Because now in the development banks, if you remember correct, so in somewhere down the line, it may talks about the activities or rather than banks, right? So in the banks, you can take some inputs when writing this, right? So like, what are the activities provided by the development banks? So then think about what they do. Infrastructure project financing, advisory services, exporting board support, regional development, right? Some of the activities. At least if you can write 2 points here, that is fine, right? Because 2 marks, 2 points. And he has given 6, 7 points here. So maybe 2 points would be sufficient. Then next one is basically it's asking about NPV in project evaluation. Basically, we have discussed that several advantages that you can write it. Maybe the same thing he has mentioned here. What is, use the discounted cash flows. NPV is the present value of future inflow and outflow. Maybe another word, capital budgeting, investment planning. Positive NPV, that's how we're going to decide. Cost of borrowing, right? And a time value also to be considered could be another point that you can include here, right? So it's not different and difficult, because here he is asking about the definition, right? Again, you better mention about, time value of, how you are going to do the NPV could be a one line, and maybe 1 or 2 advantage of the NPV could be another line. 2 points would do, right? So take inflows, outflows, net cash flows, apply discounting factor, discounted cash flows, and then the difference between the initial outflow and the future could be the value, and based on that, positive, negative, we'll take the decision. This is the process. Number 2, taking time value of money, considering the time value of money, and considering the throughout cash flows will be the kind of the features of the NPV. That's it, right? Maybe 2 points would do to support that type of answer. And then this is again a bit of new thing for us, where critical path, where in some projects we are trying to use different tools. The critical path analysis is another management tool we are basically deploying, where in a critical path, what we are trying to do is, in a project there are several, the activities. So we give each activity starting and ending time, and based on that, we will set those activities from A to, start to end, and we'll see what are the critical activities in order to complete the project. So that's what is the critical path. For example, let's say you have some activities is something purchasing a land, developing a land, fencing land, and then do some filling, and then putting up the buildings. So that this the activity. So then there may be some activities which are very critical. For example, now without leveling the land, you can't start the building like. So then this activity is critical for the next one. So this one, this one, this one. So that will be like sequentially we are adding now. But there are some other activities which are not critical. For example, let's say while you are developing the land, you can purchase some raw materials for the building. You can complete the drawings of the building. So those things you can, like, it's not mandatory to complete the land work to start procuring some material, complete the drawing, getting some approval. You getting my point? So in a project, there are some activities which are critical to the project, which are not critical to the project. So the critical path is when you are finding out those critical activities, and when you sequentially put one activity, two activity, three activity, and all that, then the total time taken to complete from A to Z is we call the critical path. In a case of critical path, you can't shorten the project. That's what I'm telling, because you complete the land and then put up the building. Without leveling and putting everything, you can't put the building up there. Like say piling, for example. Say if you are putting a apartment project, so you can't start the apartment work without completing the piling. But you can't get customer advances, customer orders, marketing, even while filing, even before filing, even after putting the building like that. So that's, they don't have a link. So you can start the marketing of clients even from the start, even after the filing. Because if you have done the filing, it's good that you start marketing and you can show the customer, so we have completed the filing. More and more customer orders come. So at the start of the project, you might say, so we are going to have this, so there may be lesser number of clients coming. So like that those two activities are not critical. So in a project, what we are trying to do is we try to identify critical activities and we put in a sequential manner, and then we see what is the starting and ending time, what's the time required for each activity, and then total time for the critical activities will be the critical path activities and critical path duration. So again, we will try to do a similar question later also to support this critical path, but just to give you an understanding about the critical path activity. So what I wanted to share today is basically kind of an understanding, because we have some time left since we completed the previous lesson. And then, so next week, so we will do the rest of the session, where we have one more session to continue. So after that, possibly we have 3 weeks to do. So there I am planning to do some past papers, especially starting from last year paper. And if you do have any area of requirement where you want to do this kind of thing, please let me know, because we have 3 days to go. Possibly today is like 11, by 18 we can complete 25, and first week and second, like November 1st and November 8th or whatever, we have 3 days to go. So I am planning to do some selected past papers. So if you do have any particular area of interest, please let me know, so that some of you may have not with me from the beginning of the class, so that if you need maybe have a one question in micro, have one question like that, so let me know, so then I can pick and choose, and we will discuss at least one question on the particular area, so that also you can select the other areas and